potential uptrend?
Good morning. All right, so let's talk about what happened recently. Yesterday, there was some recency bias and some sunk cost policy that kicked in. And despite knowing few things, I still made many mistakes.
Uptrend.
And one reason is that some of the recent winnings, so this was 627, 630, and yesterday nothing went properly right. I still got about 50% right, but uh, in this situation, especially here, this position was in profit, and also these three positions at one point they were in profit. Instead of locking in, I was so sure that it is going to hit. So and then it reversed there. So this is a perfect reminder for myself to stay flexible, and instead of thinking what I expect will happen, I need to stay focused on what I need to do based on what is actually happening. And let me also look at some of the signals that I ignored along the way. So despite knowing all possibilities and probabilities, made some mistakes, and that went somewhat like this. So, the market on these days, whenever it went down, it recovered so nicely. So got stuck in that notion. Even here, see this long wick. So that's how it recovered. But yesterday it was a considerably a decent downtrend here, the daily chart, and signals were to the most part. I mean, they are always correct because they based on what is actually happening, and sometimes I choose to you know take the signals that seem to have higher probability. And let's take a look at what actually happened yesterday with the signals in particular, other than the trades that I took are already here. And after this also, I switched to another account and took a couple of small quantity trades, meaning then reducing the copier and everything. Even there, I made mistakes, even though there was some recovery. This is when the recovery was happening, but my stops were too tight. So the stops need to be at logical location. So this is what was happening. I did ignore a little bit on the hourly chart also yesterday, July 1st. So this is the 9 to 10. This happened. So this was 8 to 9 was this. No, this is 8 to 9. So let's see, staying on the daily there, and then so as this was developing, So initially as it went up, so I got profitable there. But after that, I thought it will go higher, right? Because it has crossed the VWAP. But when this happened, instead of switching my bias to the downside, I thought, okay, this will recover again, before hitting the daily low. And then this blue line is the previous day's high, and it will recover from there, etc. So it did, just a little bit recovery also, and I might have gained some, but then, yeah, I did. This was a profitable trade somewhere, maybe this year, around 9:39. Anyway, so then it suddenly, based on this momentum and the volume, the increasing volume, I thought, sometimes the volume is a little bit misleading because on a
Uptrend.
minute chart it can change suddenly. But anyway, so it went down. So now respecting the signals alone, sometimes I think that the first or second signal, afterwards, I don't um, give weight to that signal until it settles a little bit and then goes further. So yesterday I made the mistake of not following the signals exactly, but the signals are, this is a downtrend, downtrend, downtrend. So everything is here. And after such a long
Potential
downward move,
uptrend.
you don't act on the very first signal you get, but on the opposite side, you can take the trades there again. So now this was the first uptrend signal. This is the second, third here. So if you act here, this was a nice move, and I got some of these moves actually. So those were some of the winners there. I think I need to match the time to the trades, but that's what it looks like. But again, this was volatile here, and it was okay to step aside here too. So this is hard to get right when this is fluctuating like this, unless you have some room. But basically it made the lower low or lower low here. So at this point, giving enough room, and then as long as this lower low is not violated, I can stay with that trend. But this is the other account after 1040, right? So even here, some of the winners I got, but my stops were not uh, very good. And so some of the entries still got whipsawed. But basically that is the recovery part on that part. On that part, the signals might
Uptrend.
be, on a choppy trend, signals may be a little bit not easy to follow. But the overall structure was good. And this is at 2 o'clock, it's still, whipsawed here. So even if you were tightly following, or you have to lock in some of the wins. So that is how overall it ended up working out. And as far as today is concerned, it is stabilizing a little bit, even
Potential
though
uptrend.
it has gone down from where it opened. So opened here at 694, and currently it is at 666. So it is below its open. So these are all yesterday, I mean overnight Globex hours. And this is yesterday at 8 p.m. Central. So this is the European session from 2 Central, my local time. So this is where the regular trading hours started. So my focus today is to try to stay flexible and avoid the mistakes.
Potential
So
uptrend.
also try to avoid the recency bias. That's my goal. And also anytime, a couple of mistakes that happen, I get into the notion of this sunk cost fallacy, trying to recover as soon as I can, but I should be comfortable, allowing some room for the
Potential
negative
uptrend.
PNL to stay on the chart. So basically, to me, what happened is, had a streak of winning days, and then uh, it goes like this: that you have a couple of good wins or winning a winning streak, and then you start thinking you can push it, that you have got enough room to be a little loose. So that was me yesterday, to at least on some of the trades. So I had many trades go well the past few sessions, and started feeling overconfident. I thought it would just work out again. So I felt like I had earned some breathing room. But the market doesn't care about that. And when I locked into a bias, I didn't shift when the signals changed. So I saw what I expected to see, not what was actually happening there. So that's where recency bias bit me, combined with my sunk cost fallacy that, hey, I am uh, expecting this, it's already overextended, this bounce should happen, things like that. So if I cannot shift gears, at least the least I could do is at least to step aside, you know, take a bigger picture view. So, feeling like I need to recover right away instead of taking a breather, right? And then after taking a loss, I tried to get it back too quickly, stepping in again before things confirmed. And that's that sunk cost mentality, right? Feeling like I needed to recover right away, that part. So instead, I should take a breather. I should respect the market. But I jumped right back in. And if you see some of the trades here, they were in so close proximity. Especially this worked, and then why not here, right? So I need to actually match this to what happened. So this is 10-4 to 10-5 work.
Uptrend.
10-6 to 10-8 did not work. And I can easily see what happened there. There would be a big move like this. So I need to give myself a moment to reset. So without that, I might make it worse, and I made it worse yesterday. So before I continue further, let me take a quick look at
Potential
what
uptrend.
reports are due today. Okay, so these are all done. So we have petroleum status report at 9:30 EST. I mean 9:30 Central, 10:30 EST. So I'm in the Central time zone and it's 8:38 here and 9:38 in New York. So without any major report due, it's okay to start looking at the trading opportunities. So we have already hit yesterday's low and it is bouncing back from there. Whether it will retest that or not is yet to be seen, but it's likely to stay above here unless if it breaks below, then expect another downtrend. I mean, it can always recover, anything can happen.
Uptrend.
So based on all this, this is what I'm reminding myself today. Getting on the right side is important, but if I can't get on the right side, I don't have to force it. There is no reason to rush to recover. All right. And if the signals aren't there, I can step away or I can wait. So in here, the signals are here nicely and we act on first couple of signals. Those things happened right at the market open. And due to the high volatility during the market open, I tried to wait till 9:30
Potential
or
uptrend.
so. And otherwise, the signals are good. Slightly side volatility is there too. So the limit order is usually near the signal, not at the close of the bar. So for example, this you get the signal at the close of this bar. As soon as the bar is closed, you can place the limit order somewhere near here. So you get a fill on next one or two bars. If it's not filled in a couple of bars, you can cancel that order. Otherwise, you get fill here. Usually you get the target. So since couple of signals already happened, so after the long bar, don't act immediately. Instead, you can place another limit order somewhere near the middle of this bar. So you get fill here and you hit the target. I mean, that's the idea at least. And probabilities, and you can see the percentage winners. So at least 70 to 80% trades end up winning. And that is what happened day before, even before, and prior to that also, since 623, 624, 625, 626, and I changed the format from 627, and those are in this sheet here. Yeah, I did not. Yeah, I have the tracker for them. Majority of the days, this is what is happening, about 70% winners. And again, now, some stops are bigger than the winners, and that is also because of where the order was placed and where the trade was taken in relation to the bigger context. So getting on the right side is important, and if I can't get on the right side, I can at least wait, take a few minutes, even meditate, and let the market settle basically. and come back when the opportunity is truly clear and it's not too late either. Sometimes, you have the right idea, but if it is too late, you can still wait. It's a long game, learning to pause. Instead of expecting what should happen, I should see what's actually happening. And that is important.
Potential downtrend. Uptrend. Potential uptrend. uptrend, uptrend,
Order submitted. Order filled. Order filled.
Uptrend. Potential downtrend. 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 Potential uptrend.
Order submitted. Order filled.
Uptrend. Potential uptrend.
Order filled.
Uptrend.
All right, so and also this is my bad. So there was a calculation mistake which only took half of the way here based on the previous copy paste. But if the actual summation from here to here is much bigger than I had put in here, that is yesterday. And basically this took away both more than both days gain and some. So that is the cost of not following the signal or not being on the right side of the market and then jumping in too quickly without giving it enough room. Yep, so this was a mistake, the calculation part. Now it is correct, 48 to 71. 48 to 71, 48 to. So yeah, it missed a couple of these things. So yeah, there were some winners expecting a um, possibility of a recovery, but this here was the bad reckless entry. So today couple of winners so far. So if I'm taking a little bit more risk, I should
Uptrend.
enter 2 positions and then hold on to 1 because the bias is up. But I need to trail that one also.
Potential uptrend. Uptrend.
So post any questions in the Zoom room.
Potential uptrend.
Order submitted.
Uptrend. Potential uptrend. Uptrend.
Order filled. Order submitted. Order submitted. Order filled. Order submitted.
So it's now getting to the target I wanted. Based
Potential
on these
uptrend.
two trades, I might have squeezed that out, but there was a potential for a reversal here that so I got that one.
Order submitted.
And keeping the other order in place.
Uptrend.
Order filled. Order cancelled.
All right.
Potential
I'm glad
uptrend.
I caught at least part of that. If this was also failed, it would have been nice, but it's
Order
all right.
cancelled.
And also met the daily target on few of the accounts. So there are different quantity being traded at different accounts, and this meets the daily target on those accounts.
Uptrend. Potential uptrend. Potential uptrend. Uptrend. Potential uptrend. Potential uptrend. Potential uptrend. Potential uptrend. Uptrend.
Order submitted. Order cancelled. Order submitted. Or Order submitted. Order filled.
Uptrend.
Order cancelled.
Uptrend. Potential downtrend. Potential uptrend. Potential uptrend. Uptrend.
All right, I will be wrapping up the YouTube stream here. The Zoom room will continue for some more time. So we got a nice uptrend today and caught at least some of it. Was a little bit more cautious in these, daily highs and the areas like that. If I was aggressive or if I kept one position trailing, it would have still stopped out here, but could have caught a little bit more, after a red day yesterday. Was a bit more cautious today. It's a long game anyway, so I don't need to rush, but we'll continue further a little bit more in the Zoom room. Only the cautious trades and maybe even a uh, different account with a smaller quantity. So stay flexible, listen to the market, not to our egos. Yesterday was a reminder, a little bit painful one, but a very good one. And if I study those charts and tweak, fine tune a little bit, I can
Uptrend.
make it, increase the probabilities even higher. And one of the days like that can, easily can uh, catch me by surprise. So I need to be aware of the recency bias and uh, whatever is actually happening in the market. One or two day, so 1 or 2 days does not define my results. So if I stay disciplined, if I take breaks when I'm off balance, I can protect the bigger picture. And that is the game, the long-term one. So trading is a business, not a revenge mission. And yeah, that's what I'm working on. So wrapping up the YouTube stream, just a couple of rants on the psychological traps like recency bias, sunk cost fallacy, overconfidence, and confirmation bias. So let's see if I can put it in some context here.
Potential downtrend. Downtrend.
So we need to keep this daily chart for the context, and all right, what I really wanted to talk about was this some of the psychological traps. All right. So recency bias is a big one. It basically means I put way too much weight on what just happened. So my brain keeps saying, hey, that last trade worked, or so this one should too, or market behaved like this, it recovered most of the days like this, or it should do certain things
Downtrend.
like that. So because of the short-term memory, we pay attention to most recent things and we give more weight to what happened recently. And that can be dangerous, right? So because market changes every minute, what worked yesterday might not work today. So that is something I need to keep reminding myself that, stay aware of what's happening right now. So when I let recency bias run the show, I end up ignoring signals that say the move is done. So we got the downtrend signals here, but against such a strong uptrend, I'm not going to act on it here at least.
Potential uptrend.
So recency bias keeps me stuck sometime. And the sunk cost fallacy, it closely follows. And basically, this is when I widen the stop, I get married to that position that, hey, now I have increased the risk. Now this has to work because otherwise, you know how it goes. Basically, I feel invested. You know, I have spent time, money, energy on a trade. So I start thinking like, hey, I can't bail now,
Potential
you know,
uptrend.
even if it's clearly wrong. So when I give just an example, let's say, you know, such a strong uptrend, counter trend trades have worked very less for me. I mean, they have high probability of failure for me. So, but just for the argument's sake, let's say I did a stop here. So my invalidation point is right above. But if I give it more room, hey, you know, it's overextended, it should return back after that much time. So that is where the sunk cost fallacy kicks in. So, you know, even if it is clearly wrong, I think that, you know, it makes me hold losers too long. Or I try to fix them by doubling down, and that adds even more. Or sometimes I jump right back in, you know, trying to recover. So that's a losing cycle, and that's what happened yesterday, in some cases at least. So I have to remind myself that the market does not care about my sunk costs either, right? Each trade is brand new. Every moment is brand new. And it's hard to remember that in real time, but that's the truth. So when you don't take time to take a breather, take a short break, you get stuck, or you get fused to the idea that certain bias should work. And then the overconfidence, confidence is good, and you need to have a certain level of confidence before you can pull the trigger. But too much, that's dangerous. It may not be classified exactly as overconfidence, but what happens is
Uptrend.
when you are trading alone by yourself, think that, hey, this should work, or this is overextended, or, this is still above, you know, um, whatever MACD is still positive. You can convince yourself several ways. So that, in terms of trading, even though you are a humble person in general, when it comes to trading or your position, you might be overconfident that your analysis is correct, but that will be dangerous because when I'm on a winning streak, I start to believe I can't be wrong, and that is a setup for big mistakes. So, in a couple of these short range days, what had happened was, it gave a couple of downtrend signal, then went up. But then the next signal, when it gave the downtrend signal, it at least retraced till either pivot point or VWAP. And then even if it was a up day, it did those things. So that is something like a recency bias. And, it can also lead to the confirmation bias, which is, I look for evidence that supports my opinion, right? So say if I was a short here, I would be thinking, oh, okay, it is pulling,
Uptrend.
it's at least it's pulling back, etc. Or I should wait, things like that. So when I look for evidence that supports my opinion, I ignore the data that contradicts me. So that's how I miss reversals. That's how I miss some of the downtrend days. And that's exactly what happened yesterday. So that's how I biased too long, or I stayed biased too long. So these psychological traps are everywhere, not just in trading. And they all work together to push me into bad decisions sometime. So unless I am self-aware, so they can push me into bad decisions, or even otherwise they can add too much, they can cause too much anxiety and stress. So I am reminding myself to stay aware, to check my mindset. So am I seeing what's really there? Should I wait? Should I pull the trigger? You know, am I seeing what's really there, or am I just replaying my last trade in my head, right? So that is how I get back to neutral. So, just this is a very short checklist, and looking at this sometimes, even though it requires a little bit more analysis, or can lead to sometimes over analysis and missing a move, but at least, it's better to play it safe. There is also this saying that, you holding on to the losers and cutting the winners short. But when the volatility is diminishing and volume is slowing down, there is no point holding on to your winners either. You have to check your probabilities and take action accordingly. And yes, it is important to keep your risk to reward ratio 2 or more. But sometimes locking in the profit is important too. You have to check those probabilities in the long term and see your winning ratio versus uh, your risk to reward ratio. So in the long run, taking was some big positions and holding on works better. And so even if you go on like instead of the daily chart, look at the weekly chart and enter at some good locations. But when I am day trading, when I have to close my positions at the end of the day, etc., it is, you can go by the daily chart. Even on the daily chart on days like this, you enter here, exit here, that is a solid move. And then you can keep the risk low also. And that strategy has worked for me, but if I'm not checking or trailing it properly, um, I was not able to consistently meet the daily goal in that method. And some days were good, some days were not. So for me, this is what is working in the recent months. And, combined with my winning percentages, and this is churning out, I'm hitting the daily goals. And that is what is working for me. You do what works for you. We all got to work on our strategies and follow our own plans. So overall, if I can't get back to neutral, it's totally fine to step away, right? There is no rush. The market will still be here tomorrow. So that's what long-term consistency is all about. All right, with that, have a nice day. And if you are in the Zoom room, we'll see you in a bit. All right, have a good one.